How the Medici Bank built a financial empire. In the early 15th century, a single family in Florence built the most powerful banking institution in Europe. They were not kings, they were not generals, they were bankers, and through credit, accounting innovation, and political strategy, the Medici family transformed finance into power. To understand how they did it, you have to understand the world they operated in. Renaissance Italy was not a unified country. It was a collection of competing city-states: Florence, Venice, Milan, Rome. Trade was expanding rapidly across Europe. Merchants needed credit. Rulers needed financing for wars. The church needed money to operate across multiple kingdoms, and money in the 1400s did not move easily. There were no central banks, no electronic transfers, no standardized national currencies. Every region had different coins, different values, and different risks. Banking was dangerous, but it was also an opportunity. The Medici Bank was officially founded in 1397 by Giovanni de' Medici. Unlike many lenders before him, Giovanni focused on stability and relationships rather than short-term profit. He understood something fundamental. Trust was the real currency. Instead of concentrating all operations in Florence, the Medici established branches in major commercial centers: Rome, Venice, Geneva, Bruges, London. This was revolutionary. Each branch operated semi-independently but reported back to Florence. Profits were shared through partnership structures. Risk was distributed across regions. This was an early form of a multinational banking network. One of the most important moves the Medici made was securing the papal accounts. The Catholic Church was one of the largest financial entities in Europe. It collected funds from across the continent. Managing those funds required currency exchange, bookkeeping, and credit extension. By handling papal finances, the Medici gained not only profit, but influence. When you control the flow of money, you gain access to information. When you gain access to information, you gain leverage. Under Cosimo de' Medici, the bank expanded aggressively. Cosimo understood diversification before the term existed. The family invested not only in banking, but also in trade, wool production, and real estate. This reduced dependence on a single income stream. But the true innovation of the Medici Bank was accounting discipline. They refined double-entry bookkeeping, a system that tracked debits and credits across accounts. This allowed them to monitor branch performance, identify losses early, and maintain structured financial oversight. In an era without modern auditing, this was a competitive advantage. However, banking in the Renaissance faced a major constraint. The church officially prohibited usury, or charging interest. So how did banks make money? They structured profits through currency exchange and partnership arrangements. Loans were often embedded in exchange contracts, where the profit came from differences in currency valuation rather than explicit interest charges. It was financial engineering before the modern term existed. The Medici also mastered political strategy. Rather than ruling Florence openly, they maintained influence behind the scenes. Through patronage, alliances, and strategic lending, they shaped political outcomes without formal titles. Credit became a tool of diplomacy. If a ruler depended on your bank, your leverage increased. If a noble family owed you money, your influence extended. But this model carried risk. As the Medici expanded, they became exposed to sovereign debt. Lending to monarchs and political leaders is profitable until repayment becomes uncertain. Several European rulers defaulted on debts in the 15th century. Branch managers sometimes made risky loans to maintain political favor. Oversight weakened as the network grew larger. After the death of Lorenzo de' Medici, leadership deteriorated. Internal controls weakened. Poor branch management and bad sovereign loans began to accumulate. By the late 15th century, the Medici Bank was in decline. What built the empire, scale, political ties, expansion, also contributed to its collapse. There are lessons here that remain relevant. First, finance creates influence. The Medici did not conquer territory with armies. They extended credit. Second, Diversification matters. Their early success came from spreading risk across regions and industries. Third, political entanglement increases financial vulnerability. When banks become too intertwined with power structures, objective risk assessment can weaken. Fourth, growth without discipline leads to instability. As oversight declined, exposure increased. The Medici story is not just about wealth. It is about systems. They built one of the first multinational financial networks in European history. They managed cross-border capital flows. They engineered profit structures under religious constraints. They demonstrated how accounting innovation creates competitive advantage. And they showed how financial power can shape political reality. In the Renaissance, power was often visible: crowns, armies, cathedrals. But the Medici proved that influence could also move quietly, through ledgers. Their empire was not built on conquest, it was built on credit. And when that credit weakened, so did their power. Understanding that is not just history, it is a reminder that in every era, financial systems sit beneath political systems. Money moves first, power follows.